Hey, y'all, this is Troy Black, and I'm going to be talking to you today about how Japan just broke the global economy worse than Greece. According to Andre Jick, this is a YouTuber. He posted this video 2 months ago. It's got like 1.7 million views. So I'm going to be talking about this issue. This is the first time that I was alerted to this issue of what is happening in Japan and has been happening over the last couple of decades, and how it intensified in 2024, and how there's still a looming threat to the global economy, but also specifically to the United States economy. I'm going to be talking about a potential stock market crash today and what Donald Trump is currently doing about it. So, super exciting episode. There was a response to this video shortly after by Professor Steve King, where he said, will Japan destroy the world economy? He's a top economist, apparently, so-called self-proclaimed top economist. And he reacted. And I tried to watch this video to get some sort of clarification, and it just confused the living daylights out of me. So either you have to be an economist to understand it, or it's just making no sense whatsoever. And if you were an economist, you would already understand the issues at hand. You wouldn't need to watch the video. So I am trying to present this in layman's terms today to the best of my ability. Some of the things I talk about may still be a little bit, they may still need some extra further investigation. So, there's that. But here's the main problem. The main problem is that the Bank of Japan ended negative interest rates in 2024. And this could potentially change everything, not just in the Japanese economy, but specifically in the U.S. economy and in many economies around the world. And some economists are not freaking out about this, but there are some who, like Andre Jick, who are saying this could be the biggest thing that we've ever seen, right? So it's potentially catching up to us relatively soon. Dollars could lose their value, inflate to crazy numbers. This could could create an increase in rates all around the world, in other nations, not just Japan or the United States. Money could potentially be massive amounts of money could be potentially removed from the stock exchange all of a sudden, and any other sort of investment that suffers under inflation, and then put into investments that don't suffer from inflation, hard assets. And that would immediately cause a crash, very similar to the crash of the stock market in the 1920s, which led to the Great Depression partially. So the truth is, all of these things have kind of already happened in 2024 when Japan ended their negative interest rates. But it could keep getting worse, and we could see a repeat. We could see actually this rabbit hole get a lot deeper. So let's look at Japan real quick, and I'm going to give a few details that are going to help to explain why this situation has happened, what's been going on, what Japan has tried to fix, and why it could potentially create this bubble that could burst. So this is Japan, at least if you get on Google and you say, what is Japan, right? Japan is actually they have the oldest population in the world. So their median age of the people in Japan are older than any other country, which tends to create a lot of problems for a nation. So they've actually been getting smaller, their population, since 2008, instead of growing. And, people like Elon Musk have warned about populations around the world starting to decrease. So we can watch Japan and kind of see like what problems could that create, right? But here's some of the problems. Less workers means less growth and less stimulation of the economy. And so it's essentially, we could see an economy inflate upon itself. They're borrowing money just to keep going. They have the highest debt to GDP ratio. Also, people aren't buying stuff. There's a few reasons for this. The first reason is an older population tends to fall into habits, into grooves, and they don't go out to buy new luxury vehicles. They just keep riding in the same car they've had for a long time, right? Like, they don't buy as much stuff typically. They're more savers, and and they're living off of retirement savings, right? That kind of situation. So Japan's economy has faced a sluggish consumer spending for years. It's partially due because of the aging population, but it's also because of deflation. So we are currently facing inflation here in the United States, right? Everybody knows inflation's a terrible thing. But apparently, if you look into it, deflation is just as bad, and it causes other problems, but it's something else that has to be fought as well. And it's something that Japan's government has been struggling to fight over the last several decades. This is a problem of deflation. What does it cause? Well, deflation causes an economy to stop working like a well-oiled machine. Essentially, it's like, this idea of if prices are falling, somebody's going to say, well, now might be a good time to buy. But if they see the history of falling prices, and then they go, well, next year it's going to be even lower. So let's wait and buy a new vehicle next year, because then the cost is going to be even lower. But the fact that they didn't go buy a vehicle causes the prices to go even lower. Yes. But then the problem is, it's like all the companies, all the businesses, the entire economy is making less money. And that just causes like a spiral, right? So they've been under this pressure, and they've been manufacturing a fix. So instead of a natural fix occurring, because they're not having babies, right? They're not replacing the population. They've had to manufacture a fix. So that's where the Bank of Japan has stepped in to fight deflation and other issues with these manufactured fixes. But the problem is, if you're driving down the highway and you've manufactured a fix for your vehicle, like you duct taped your fender on, eventually you put enough pressure on it, it's going to fall back off, right? So that's what we're seeing, is this potential spiraling effect. So deflation can create this self-reinforcing cycle. Falling prices reduce demand, which lowers production, leading to job cuts, lower wages, further reduce demand. Japan experienced this spiral in the early 2000s, and the GDP growth average was just 0.5% annually from 1995 to 2005. That's super, super bad, right? For lack of a better term, there's my professional economic phrase that I'm going to use for today. Super, super bad. So what it also does is it inflates that deflationary mindset, like I said. So people get into the habit of not buying things, waiting for a better deal. And it's just a terrible situation to be in. It's the opposite of inflation, but it's really bad. So what did the Bank of Japan do? What the Bank of Japan has been doing is they bought up half of the Japanese bond market. So if you don't know what a bond is, it's where the government sells you a bond. You've probably watched the war films from World War II, where the government issued a lot of bonds and said, buy government bonds, save America, save the world, and it's like you're buying a bond from the government and you're investing your money in the government, and they're going to pay that bond back to you, the money back with interest later. So you're essentially, as an individual, a consumer, you are loaning your government money by buying a government bond, but you're also saying, I trust my government. I trust the strength of my government, right? So what they did was the Central Bank of Japan, they bought up half of the government bonds, which is very odd thing to do. So if we were in the United States, it would be kind of similar to the U.S. Federal Reserve buying bonds from the U.S. Treasury. So it's weird. It's like, well, the government's buying their own bonds. How does that work, right? But the Bank of Japan is a little bit different than the Federal Reserve. It was created through an act that actually enables them to do things a little differently and puts them in a slightly different category. We're not going to get into that. But the point is, the Bank of Japan said, we need to fix this problem of deflating prices, right? Our aging population, okay? Now, I'm setting all of this up to give you the real problem that could potentially still occur here in the United States, and then also to give you a solution that I came up with that may be a bad solution, but also what is Trump doing about it right now, okay? So the Bank of Japan has been working towards price stability and sound development of the national economy. So one of the things they did, back in 2013, they held about 11.55% of the Japanese bond market, okay? So they only had 11% of the bond market, but that was 2013. A decade later, 2024, they held 53.2% of the Japanese bond market. So they bought up half the bonds in 10 years, essentially, 40% increase. And they're trying to manufacture this economic growth, but there's a huge problem here. So what happened to the bond market? So when bonds are purchased in bulk, what happens is the demand for the bonds increases, right? So if I go buy all the eggs, we've seen that happen here in the States. When all the eggs get bought up, guess what? The prices go up. Why? Because now it's hard to find eggs because everybody's buying them and hoarding them, and they go bad in a week and a half anyways. So there's no reason to do that. But it worked better with the toilet paper, right? Like when we all bought the toilet paper, y'all probably remember, everybody had a bunch of toilet paper in their closets, right? But the people that didn't have it had to go pay $50 for a roll of toilet paper. Like, it was insane. So that's what's happened with the bond market, is the bond prices have gone up and the bond interest rates have gone down. So that's how it works. When the bond prices go up, it's the same, inversely related to the bond prices are inversely related to the interest rates, right? So the interest rates have gone down. So the higher bond prices result in lower yields. So the return on investment is less. So what happened is, long story short, eventually the interest rates on borrowing money in Japan got to the point where it became literally went to negative. So it's like I could go borrow money for a negative. I could buy up a bond if I'm saying that right. Well, I'm just going to read my notes because now I'm confusing myself. I'm telling you all, I am not an economist today. I've spent weeks researching this, and then I spent probably about 5 hours today putting this together. So I'm trying to give you all the best version of this, and now I'm putting my own opinion in here. I'm going to screw it up, but here's what happened. When a central bank like the Bank of Japan buys government bonds in the open market, it injects money into the financial system. So that's one of the things. So this is increasing liquidity. So essentially what happens is the government has more money to work with, right? And it actually encourages banks to lend more and reduce the borrowing costs across the economy. So they're able to lend more money and you don't have to pay as much money to borrow the money, right? So people are able to borrow money at a very low interest rate. And so what does that sound like? Let's say people said, hey, somebody said, hey, do you want to borrow $10,000 to invest in your house? We're going to put a 25% interest rate on it, right? For you to borrow money, 25% interest rate. And you're like, that doesn't sound very good. That's like a credit card rate. Like I am going to be paying so much interest. It's not worth it to me. But what if they said there's a 1% interest rate? Like 1%. I could literally take that money instead of investing in my house. I could put it into, let's say, the stock market fund, an index fund. I could put it into a savings account and literally make money off of because the interest is so low. And in fact, I know somebody personally that did that. They had a chance to get a government loan at like 1% interest, something insane like that. They just invested it, right? And made a bunch of money off of it over time because they borrowed at such a low interest. They were just able to make a few interest points more and make a bunch of money. This is what's happened in Japan. A lot of investors in Japan have said, wow, the interest rates are so low based on the things the Japanese bank is doing that we're going to borrow tons and tons and tons of money. And what did they do? They put that money into foreign investments. A lot of it going to the United States, the United States stock market, United States real estate, crypto markets, even U.S. Treasury bonds. They were able to borrow money at such a low rate in Japan that they just borrowed it in the Japanese yen, and then they converted it to US dollars and then invested it over here. And what happens? The difference in the interest rates is automatic profit. So they're just making money by borrowing more money and investing it. So what happens is this creates a bubble that people like Andre Jick are essentially trying to wake people up about and say, hey, there's a bubble here that could burst any day. And if it did burst, we could see something as big as the 1920s stock market crash, essentially. We could see, because what happens if for some reason the Japanese investors, which includes the government, individuals in Japan and Japanese firms, and even corporations, if for some reason it became not profitable for them to keep their money in the US markets or markets around the world, we could see a trickling effect a ripple effect that would cause them all to pull out all at once. And what would happen to the stock market? Well, people wouldn't know at first what was going on, and everybody would lose their minds and say, well, the stock market just dropped 15% in one day, or, like the S&P 500 just dropped so much percent in one day. And what does that cause? It causes a snowball effect where everybody starts pulling their money out, and you could create a massive market crash, right? So that's what people are worried about. So here's when the negative interest rates came into play. January 2016, negative 0.1% on certain commercial bank deposits held at the central bank. So why would people still buy Japanese government bonds if they got a negative interest rate? Well, it's because these bonds are very safe. They have a very old population, right? They're going to invest in these bonds. They're going to buy the government bonds, and they're going to invest in the government the way that they're holding money, right, through these bonds. They're going to invest in that. They're putting their money into their government treasury, essentially, and they're saying, I don't care if I'm losing money on this because I'm just looking for stability. I just don't want to lose more money, right? So I'm not going to go invest in some risky thing. They would look at it like I'm just paying a fee every year for you to save my money, right? That's kind of what the way they're looking at it. And they're looking for a safe place, right? And so that's why this has worked for a certain amount of time. But some of these things are starting to shift. There has been a demand for safe assets And that's why the money's there. And so now that they've invested the money for a negative interest rate, it's there. There's a bunch of extra capital. And now they're loaning that out to everybody, all the investors, and all those investors are getting a really good rate on that. And then they're putting the money into the government market, the American market. Okay. So this is called the Japanese yen carry trade. And this is the wildest investment opportunity I've ever heard of. I mean, I would be taking advantage of that if we had this here in the States. If we had a carry trade, opportunity, it'd be like, there would be no question. Yes, absolutely. I'm going to borrow 100,000 at a 1% interest or whatever, 0% interest, whatever it is, it's very low. And then I'm going to invest that 100,000 in something else that's going to return and have a higher percent interest. And I'm going to pay the loan back, but I'm going to just, whatever comes off the top, that's profit, right? And so here's what's happened. In 2024, the Bank of Japan finally ended the negative interest rates, March 2024. And they raised the rates even further in July of 2024. So they ended the negative, and then they got up to 0.25% in July of 2024. And Japanese investors started selling U.S. assets to cover their losses. So they had all this money invested, and then it started to create this ripple effect. So investors sold higher yielding assets like U.S. Tech stocks, emerging market bonds to cover their loans. And it leads to a widespread market volatility. So it's like the market starts going nuts, right? And this unwinding caused significant market disruption. So early August, so they raised the rates in July of 2024, August 2024. What happened? Japan's stock market, which I can't pronounce right, but it's the Nikkei 2025. I don't know how to actually say that. It plummeted 12.4% on August 5th. Their stock market plummeted 12% in one day. So these are the signs of how bad this could potentially be. Globally, the S&P Global Broad Market Index. So I'm going to show you all some. Sorry, I haven't been following through with these articles because this is the Bank of Japan. I'm going to show you all some of these Japanese yen carry trade. There's so much information on this if you want to go learn more. Bank of Japan ends the world's only negative rates regime in a historic move, abandons yield curve control. So this happened in 2024. There's March 20th, 2024. I'm not following on these because I'm so invested in this story that I'm like, I don't want to leave anything out. But this is Japan's stock market, their stock index plunging 12.4% as investors dump a wide range of shares. And the crazy thing is, if you look at some of these things, the stock index plunged more than 12% on Monday as investors worried that the U.S. economy may be in worse shape than it had been expected and dumped a wide range of shares. So what's funny is the analysts are trying to explain what happened, right? I don't think they got this one right. Now, that probably played into it. There was probably a mix of things happening at that time if you go look at what was happening. But immediately they say, oh, all the Japanese investors, it's the U.S. economy, right? But the Bank of England literally increased the interest rates in July of 2024, the month before this. So it's like, that is what was really going on here. Very, very interesting. And then what else happened is the crypto market got hit. So the Bloomberg Galaxy Crypto Index fell up to 17.5% immediately after that. That's crazy. That is just crazy amount of drop, that crash. U.S. markets like the S&P 500 saw a 3% drop on August 5th. And it was driven by sales of assets like NVIDIA and Tesla. And we all know NVIDIA, Tesla, things were happening, right? But I think this is what people are looking at, is they're looking at the face of the company and they're saying, well, this is all the political thing that was happening with Tesla, right? Or this is that, or this is, it's because Elon Musk was getting involved in Trump's campaign around this time, all that kind of stuff, right? And it's like, well, it probably was partially that, but also people weren't watching what was happening behind the scenes. And I'll be honest, I wasn't either. I had no idea at the time, right? I've only researched this in the last month or so, so it's like, but it's weird to see how all of this affects everything else. Emerging markets, popular destinations for yen-funded investments, also face pressure. The Mexican peso fell over 6% in August of 2024, based on what's happening in Japan. India also had its fair share of problems based on what was happening in Japan. Like it's crazy. The Japanese yen is able to affect so many things around the world, and this could still be happening, right? So there's continued volatility at play here. The carry trade unwind, some people say, It's estimated to be about 50 to 60% completed by early August 2024. So some people would say, well, this unwind happened. It was almost done. It was not almost, but halfway done in that month of August, right? Some analysts like JP Morgan suggest that further deleveraging could occur. So a lot of people are saying, wait a minute, this still could happen. We haven't seen the full effects of this yet, right? And if the Bank of Japan increases the interest rates even more, what if we see an even worse fallout occur? We started to see the effects of it before, but they controlled it, they limited it. So this is what this article says. The Bank of Japan's deputy governor signaled no further rate hikes and amid market turmoil, which helped markets recover partially. So they saw what was happening and they said, "Oh my gosh, okay, stop." Right? That next day, the Japanese market, which had dropped 12.4% in one day, it rebounded by 10.2% the next day. Okay, so when they stopped, it went back up a lot, but it didn't correct all the way. And what if they kept going, right? What if they didn't stop? Like, there's the question that people are asking. But fears have persisted about an additional unwinding. So especially if the yen continues to strengthen, or if the U.S. Federal Reserve rate cuts are cut, right? Then what's going to happen is, as soon as it's not profitable for the Japanese investors to have their money in the United States market, the whole floor could fall out beneath us. Like, that's what people are worried about. So what does this mean, right? What does this mean for us? There's the question. So man, a lot of people have warned of a global margin call. So this is this idea of everything just falling out, like the whole 1920s all over again. And some of this has actually been exacerbated just this year. So fears still lingered at the beginning of 2025, as we saw this video here by Andre Jick. I don't think he was, after the story. I think when he posted this 2 months ago, I think this story is still very relevant for what's actually going on. But I would say it could be, right? So fears of another Bank of Japan rate hike potentially have exacerbated the volatility. So even just the fears themselves have made people wonder and worry, is this a good investment strategy? Is this not? People in Japan. Also, the Japanese government bond yields, here's where the numbers hit the fan, okay? Japanese government bond yields hit a 40-year high in May of 2025 at 3.689%. So this could still get a lot worse. That's the potential we're facing. But it might not. Don't you love economics? There's this idea of, like, we think we know everything until we don't, right? So what is the potential fix? Here's the fix that I thought of, okay? So this might be really stupid, but I've run this by a few people. How could we potentially fix this issue, right? Well, I was driving in my car one day, and I had this thought. I was like, what if, and then right after this, I'm going to share what Trump is doing about it. But I was like, what if the U.S. government instituted a solution program where we guaranteed to buy up any assets sold by Japanese investors? Now, I'll admit, we would only want to do that if we saw a global crash coming, right? If somehow, or if it started and then we could step in and stop it, whatever. But what if the United States government said, we're going to do a price match, okay? So I actually looked this up, and this is not unheard of. Like, there's just something that came into my mind. This is essentially a market stabilization fund, or a quantitative easing, which is actually a term that Japan invented, but we would be doing our own version of it, right? Now, one of the problems is it could create another bubble that would burst later on. So there's another problem, right? But, sometimes if the duct tape tears, you just put more duct tape on top of it, But essentially, the government would be saying, hey, any Japanese investors that pull out of these areas of investment, we're going to match that, and we're going to invest, and we're going to keep the reason would be to keep the bottom from falling out in the market, right? So there's some downsides. We could add trillions to the economy accidentally and inflate the dollar like crazy. That would be bad, but obviously we're already doing that. What if the funds are guaranteed? That would be great. At least it would stop it from happening, but it also might create a global image of weakness for the United States. It actually could create the opposite effect. Like we could literally be like, people could go, oh, maybe the United States market is not as good of an investment as I thought. And more people could pull out just based on how they felt about the US market. But there's also the potential of doing it secretly, and not telling people what you're doing. And maybe that wouldn't have that effect. It's also not likely that all Japanese investors would sell at once, but it could possibly happen. Here's a historical precedent. Okay, 2008 financial crisis. Many people are familiar with that. Housing market collapse, and crash stock market collapse. The U.S. actually implemented TARP, which is Troubled Assets Relief Program, and essentially to buy toxic assets from people. And the point was they're trying to stabilize the market. They're trying to keep it from getting worse. So a Japanese focused program like that would be a lot narrower, but it could draw on similar, mechanics to that precedent, right? So we could either stop the next Great Depression from happening or accidentally cause it. So it's just, I hate it. I love and hate economics at the same time. I'm not an economist. I'm just an average dude. Okay. And I'm trying to learn what's going on in the world economy, what's going on in the US economy. Why are the markets doing what they're doing? So I don't claim to be a professional at this. I don't claim to have all the answers, but if you have any thoughts or conclusions that I haven't thought of, share them below in the comments. I would love to hear that. Here's a couple other options for how we could actually fight this. Another option is we could do an agreement with Japan. The US and Japan governments could agree together to some sort of like bilateral agreement where it's like, hey, we're going to invest some, y'all invest some, or whatever it is. Market-based solutions. The last solution, which I like the most, is private sector investors could pick up the pace, right? Could jump in to absorb the Japanese sales in the market. So I like that one the best. Why do I like it the best? I'll share that with you in a moment. But what is Trump doing? Let's look at this. So obviously, I've already talked about that. But so my brother Reese was on yesterday, and if y'all missed that video, it's a super great video where it talks about what Trump is doing with the trade deals. Specifically, he mentioned the Japanese trade deal and the European Union trade deal. So what is Trump doing right now? Last week, he cut a deal with Japan. And this is similar to the EU deal. There's no tariffs on the US. There's 15% tariffs on Japan. But there's also a commitment from Japan to open its markets to US goods and invest $550 billion into the United States. So what is he doing? He's putting pressure on other nations like Japan to continue investing in the US, which is only going to strengthen the United States economy. But also, I mean, it's like it's instead of a downward spiral, it's an upward effect, right? Where it's like, oh, they're investing, so I'm going to invest as well, right? It's increasing people's trust in the United States. He's also heavily encouraging continued investment. So that's a $550 billion. So let's say the Japanese investors pulled out of the US, right? Let's say this happened. $550 billion is not enough to cover those losses because there's trillions of dollars that the Japanese investors have invested into the US. It's literally, it's like trillions of dollars. I think it's like $21 trillion. There's 1 trillion from the Japanese government Japan owns $1 trillion of US government bonds, but I think the private investors added all together equals like $21 trillion, something crazy like that. It's insane. So anyways, but if all of that started to fall out, I mean, Trump literally just saved a $550 billion investment there. So that's great news, right? But he's also heavily encouraging other nations and other companies to invest in the United States. So this is a list of companies right here. So I want to show you all this. This is Johnson & Johnson is a $55 billion investment, right? SoftBank. This was from December. This was before he was even, y'all can watch your preview for the newest Apple TV movie while we're talking about this. This was before he was even in office. This is December of 2024. Trump got SoftBank to pledge a $100 billion investment into American AI over the next 4 years. And on stage, he literally asked them, he said, can you make it $200 billion instead? United Arab Emirates, this is a $1.4 trillion agreement with the US and a lot of others, right? So Apple, $500 billion investment, just so much money being invested in the United States right now, what is that doing? What is that doing for the United States? Well, I mean, here's the Japanese firm SoftBank. Here's that article from 2024. Well, what it's doing is it is creating more trust around the world in U.S. markets, U.S. investments, right? It's causing a ripple effect. It's also easing this situation with Japan a little bit. So let's say that all happened. Well, you have one big loss, but you have several big wins. You could balance it out and even wind up ahead, right? He also has the EU trade deal where they will buy $750 billion worth of energy from the United States, another $600 billion investment from the EU as well. There's a lot of different investments coming in. But here's what I believe that this is. I'm going to go back to the beginning here, right? I love Japan. I'll just say that. I've never been, but I would love to go someday. There's a lot of things about Japan that I like. But if they dropped out of the United States market, and if this created a ripple effect, here's what I believe it is. I believe that third alternative, or the second alternative there, that third option, that private sector investors could jump in and make up the difference. I believe it's an opportunity for Americans, because this is what I'm seeing. Trump is proving right now that other nations still believe in America. And if other nations still believe in America, we should too, as an American. So you might not be an American, that might not apply to you. But if you are an American, we should believe in our country enough to invest in it. And I believe this is an opportunity. So this is an opportunity to be patriotic and buy the dip. If the U.S. bonds go down, I would say buy the dip. If the U.S. stock market crashes, I would say buy the dip, right? Don't freak out. That's my encouragement. And that's what I'm looking at right here with all of these countries investing in the United States, all these companies, multi hundreds of $1 billion companies investing in the United States right now. There's a lot of strength happening right here. And yes, there are some potential problems. And yes, what Japan has been doing, trying to solve their own economic problems, which I want them to solve, by the way. I don't want to, kick Japan to the curb in the process. So I want them to solve their problems. But we're seeing the potential effects of this bubble bursting and the potential crash here. So I would say buy the crash, invest in and believe in the American market, the American economy. So that's it. That's my summary for today. I'm at that 30-minute mark, so I'm going to have to hop off. So I hope y'all enjoyed this. Let me know what you think in the comments. Also, go check out Reese's video from yesterday. Super, super great, informative discussion about Trump and the trade deals that he's doing. So y'all make sure you subscribe. A few other things real quick. Make sure you subscribe if you're not. But also, we have a Facebook page, and we're going to start live streaming there pretty soon. So if you want to be able to watch these streams on Facebook and share those, we got to get to 100 subscribers. So y'all go help us out and subscribe there so we can get to 100 and then start streaming there. That link is going to be in the description below on this video. And then if you want to become a member and get access to the exclusive only content, we post one exclusive only episode per week. If you want to get access to that on either Locals or YouTube, you can become a member here on YouTube. You can also become a member at filibusted.locals.com, I think maybe. No, filibustedshow.locals.com. That link's going to be below as well. So there it is. Y'all have a wonderful rest of your Tuesday, and I'll see you next time.